All right, so I hope you're very comfortable because we are just about to dive back into the investment portfolio. Just in case you missed the previous episode, the investment portfolio is now looking at what are the things that you'll be investing in. What are some of the things that you need, like your emergency fund? What is it all about and why is it necessary? Then what are some of the short-term investments that you can now venture into, and what are some of the benefits of them? If you missed any of these, do not worry, we got you. You can go back to our channel, Craft Your Future Today, click on the link there and you'll just find all our videos that we've done so far. And please enjoy, don't watch alone, share the information. So we'll dive just back in with Ken. Ken is still here with us. And we left our audience at a place where we had now sorted their short-term investments, and now we're looking to go towards mid-term to long-term investments. All right, so what are some of the investments that are available for people who have mid-term? Mid-term, I think like 5 years and above. What are some of the investments that are available to them?
So, thank you, Chris, and welcome the audience. So when you're talking about medium term, you're basically talking to anything 2 years, maybe to 5 years. You find that you have a child who in the next 5 years they'll be joining high school or senior high, and you want to plan for their education. You may use an instrument, for example, a government bond that has a maturity of 5 years. So you put down a lump sum in the first year, and maybe you get the maturity in 5 years. Then you can onboard your child to the secondary school they're joining. So that's one example of a long-term investment option. You may also have other goals that are medium-term. As we are saying, you look at stocks, for example. Anyone who is investing in shares in the Nairobi stock in the Nairobi Securities Exchange, you must be fairly long-term in your investment horizon or in your view, because the volatility of shares, they are really volatile, depending on so many fundamentals about any counter in the NSE. May it be the profit earnings the company has made, may it be the corporate structure of the company, who is running it, who is the CEO, have they changed the board chairperson, and what have you. All those factors go into influencing the share price of any share in the NSE. So you need to have a long-term view anytime you're getting into investing in shares, and you must also be consistent, so that when you want to realize the money after a certain period, when you sell the share, you will not be able to sell it at a loss. And in the intermediate period, annually, if you have invested in a company, if you have bought shares in a company that is able to give dividends, then you will be able to get also something we call recurrent income. Also in the space of long-term investments.
Okay, if I can just stop you there and just to expound more on shares. How can somebody invest in shares? Because most of the time we see the counters when watching our business news, and we realize I would like to buy a share in that company. What are some of the ways of accessing those shares? And if you could also just expound, there are different kinds of stocks. You mentioned it towards the end there, where you can make money in two ways. You can make money either in the share price going up, or you can have recurrent income, for example. Is it possible to have both of these goals running together concurrently, or could you invest in a share simply to get dividends? What's your view on that?
So when you want to participate in the Nairobi Stock Exchange by buying shares in various counters, there are a lot of considerations that you need to make. There are various segments in the Nairobi Stock Exchange. There are companies in the FMCG sector, fast-moving consumer goods. they are in the banking sector. So you need to find the fundamentals before you pick a counter. But basically, when you go through and now you have picked, say, KPLC, Kenya Power, you are looking at two ways of benefiting. One, if Kenya Power pays dividends at the end of the year, then you stand to earn some dividends, and this will help you in your recurrent expenses. Say a holiday in December or something like that. Two, if you bought Kenya Power's share in January at, say, 10 bob, and in June it's at 15 shillings. So that price appreciation, if you are ready to realize, you'll get a benefit of that 5 shillings per share as your profit. But like I alluded to earlier, you need to have the goal of why you want to invest in shares. You also need to understand what amount do I have, because if, for example, you are a retail investor and maybe you have your 100,000, you might find that if you do the calculations carefully, and remember we have challenged our audience, Chris, to be very critical even when they are rating their goals, to really tabulate, give the goals an amount. So even when you want to invest your shilling, you must be very intentional to understand what do I stand to make by laying down 100,000 in X counter at the NSE. Analyze various options before you put your money, say, in the shares. You find that the stock market somehow benefits people who are highly liquid. There are people, Chris, who will have their 10 million shillings, and they want to, once a company has announced that they are going to pay dividends, say in a certain time, say in December, and for example, maybe we are in September, you find that this person acquiring those shares this September so that they can just benefit by getting the dividend payout in December. So there's a lot of critical thinking, and this is what we can always guide you through before you take your shillings and deploy them in the stock market. I hope that answers your question, Chris.
All right. Also, just to make people aware, because sometimes we want to buy stocks and there are people who are given the license to buy stocks on your behalf. They're called stock brokers. So does your company offer access to these stock brokers, or you do it for them on their behalf?
Well, as Moran, we will link you with the partners that have that license to participate in the flow of the stock market. Those that we feel we have collaborated with, and they are able to do that. So we will link you to the right people to do that. But before even you go to them, because they are just actualizing, for us, we will have now thought of which basket of, for example, stocks are we going to buy. Because when most people think about shares, they just think, I have to buy one counter. Not really. You can buy a basket of counters so that you diversify your risk of one going down, the other one going up. You want to diversify. So we can help you set up your basket, and then the stockbrokers can actualize, can actualize that by actually now buying for you at the stock exchange.
All right. So the 2 points that I picked from what you've just said is we need to diversify. So you don't just put all your eggs in one basket, putting all your eggs into one counter and wishing that it makes you rich. And the other thing you've said that the stock market takes time. It performs varyingly at different times. So you may invest at such a time when just the company is about to issue dividends, and even the price could be high at that point in time. So you need to give your investment time to grow. So I appreciate that fact. All right, you are moving on to the next kind of investment that is there.
So as you do, you have your. We have mentioned you have your long-term bonds, you have your Nairobi, stock exchange shares, and actually even offshore shares. You can invest in Facebook, you can invest in CarMax, you can invest in
the
Twitter,
Amazons
the Amazons of
today.
today. You're not. The world today is a globalized world. So you are not constrained really to just the stock exchange of Nairobi, and we can give you this access. So on top of the shares and the long-term bonds, you can still invest in something we call private equity. Private equity is just a big English word for you want to buy shares into a company that hasn't yet listed in the Nairobi Stock Exchange. This is a company that is in Kenya, it's privately registered, it's doing well. It has the people who started it, the vision carriers, who put in their capital into that business. But now they have gotten to a stage where they would like to sell shares into that company. So you pay an amount and you become a shareholder of that company, and therefore continue getting dividends, just like the owners. Probably they would want that money to expand that to expand that company. So you get to participate in the growth of gems in this country that want to grow. Remember, not all of us are able to do business, Chris, but wouldn't it make you happy if you participate in a homegrown company that wants to sell shares, and you can see, say for example, Naivas. If Naivas today were to ask you to be a shareholder,
yes,
or Quickmart supermarkets, and they had an arrangement. It's called private placement. They are selling some shares because they want to expand, probably go to Rwanda, go to DRC Congo, and what have you. They come to the market. They say, "Come, bring your money in exchange for shares." If it's something somebody would be interested in, we advise on such instruments that are fairly long term, and that's why, remember, we said in the previous episodes, you really need to understand where you are and where you are going, the amount you have, and how you want to match the amount you have, the investment product, and the goal.
All right.
Yes.
All right. So, talking about private equity, because I know most people, the big high rollers in this industry in Kenya or even the world, most of them take advantage and invest in these companies before they get listed. And some of them are even lucky enough that when it gets listed, they're instant millionaires, for example, because you buy their share at a lower price, and then when it gets listed, the market demand for their share pushes the price very high and definitely worth the investment. So it's good that people like you would be able to just provide that background, because a normal person like myself, or somebody who's just going about their normal business, would not know which companies are issuing their shares privately. And that's where specialists in this industry like Moran would come in and give that info, that quick info, the insider info in quotations of who is actually issuing shares that you can actually invest in. So thank you so much for that. I think many people don't usually know about this also as a form of investing. You talked about in the previous episodes where we talked about matching your goals and making sure what you are investing in is actually leading to your goals. And you've also emphasized that once you've started investing, it doesn't end with that first deposit. It means every month you have a budget that keeps funding that investment. And I think that is very key. I really didn't want our viewers to miss that aspect of it. It's not a one-off transaction. It's a journey. So you need to keep adding to your pot, and you're able to access even more investments as you build your portfolio. All right, so now we've built this portfolio for ourselves where we have a pool of things that we can invest in. But now here's the question that most of us never think to ask ourselves. How do I protect my wealth? You know, I work 9 to 5 or even 10 to 10 every day from Monday to Monday. But you need to ask yourself, at the end of the day, how do I protect my wealth, this income that I'm making? What are some of the things that somebody can do?
Okay, it's a fairly good question, Chris, and just to emphasize on the private placements and the private equity, as you have rightfully said, Moran is in a space whereby while those deals are happening in the market, we have our ears to the ground and we are able to avail such opportunities to our sitting investors and potential investors. Just to give a small example, we are currently handling the Mayan project down in Nanyuki, where they are selling shares into that project. It's a 196-acre piece of property with developments, with conference centers, with villas for retirement, with sports facilities and what have you. For more details, we can be able to discuss. But this is basically something you may not see being advertised, regularly. So, and that's why we are saying, your access to people like us, you are able to get those sort of bespoke, structured investments. So like you're saying, Ken has come. We have helped you do the emergency fund. We have kickstarted you with your investment journey. We have understood your goals. Now you have become even friends with the wealth manager. But how do you protect your growth fund? We call it it's a growth fund with multiple investments that are curated, that are well thought of. We need to sit and think. If we have built, say, a fund for you of 4 million, and you are walking around the city, you do not have medical insurance, and for example, an accident were to happen, and it's a medical emergency, it would be foolhardy of us at Moran not to advise you to have a medical insurance that can cater for that, so that when an emergency happens, you don't run to the 4 million we had created to pursue other goals. Okay? So right. How do we preserve, first of all, that growth fund you have set aside that is growing continually, like you have rightfully said? We want to take care of your other risks, other normal life risks. Okay? One, the most key and that is most common in the country today is medical. Chris, I'm sure you have been in 1, 2, 3, 4 groups where, WhatsApp groups.
Yes,
where
the
you
famous
have been
WhatsApp
asked,
groups.
The famous WhatsApp groups, where you have been asked to contribute endless contributions. And Kenya is a good society. We are always willing to help. But how long is it sustainable? It's not sustainable. You can sit down as a person and ask yourself, what does medical insurance cost? What does an annual premium look like for a family of 4, for an individual? We are able to structure you medical insurance that you can pay the annual premium in 4 installments, for example. So you can have a goal of setting up your medical insurance so that even as you start your journey of investment, it won't be that when you need to see a dentist, you need to come again and the investment that you wanted to buy a vehicle in the next 1 year, you find yourself now, you have told Ken, now there's an emergency, I need to break this amount and go and use it for my medical. We want you to be a wholesome individual, a wholesome family, almost idealistic, if I dare. So that if you have a medical, let the medical staff be taken care of by the medical insurance.
All right.
If, for example, Chris, you're working in an NGO, or you're working in an entity where redundancies are common or can happen, we can help you secure redundancy insurance, whereby the insurance company pays you up to, say, 6 months. Once you're declared redundant, the insurance company can pay you up to 6 months of what you are earning with your previous employer as you try to to survive and get into another place or start your own business, and what have you. You find that in the NGO sector, once a donor is no longer funding a certain project, or it will fund the project for 2 years and say on the third year we are not continuing. You guys at the second year, so where do you go? You can have that kind of arrangement with an insurance, and I can assure you the insurance premiums are affordable. The other last example, you can have your household items. Chris, you have the latest iPhone 14. If that phone breaks, Chris, or gets lost,
which is a headache to most of us.
It's a headache, and I will tell you the truth. You will not continue investing. If you are giving me 100K per month to invest, that month you will tell me, Ken, I lost my phone. I have to replace my phone. Now, the insurance company can replace that phone for as little as 10,000 annual premium per year. And that coverage goes to your household items, your laptop, your phone, your furniture, your suits in case of fire. So why are we doing all these things? So that your normal emergencies in life don't get in the way of the growth of your investment portfolio. Okay? So yes, that's how to protect and preserve the wealth that we are helping you to create. Chris.
Wow, that is just beautiful, because a lot of us have experienced the many WhatsApp groups, and it is not sustainable, as you've said. So we should ensure that we have this medical cover, even if you're a business person, because most of the time we say we're employed, and so the employer provides that medical cover. But if you're not employed and you run your own business, then you can also access this medical cover, which is very key in terms of protecting your wealth. You also mentioned protecting your wealth in the case of a redundancy, for example. We saw this happening when the donor world, when the US government cut its funding to Africa, for example. A number of NGOs had to let staff go. And so this is very important, and not many people know this, that you can insure your income. You can actually insure your income for about 6 months, and you'll be given some breathing room as you try and figure out things. What is your next step? Because what would often happen is now somebody starts selling their property or liquidating the investments that they've put in. And so this is a kind of way we're saying that you're protecting actually your investment by it being a very last resort in case anything happens, because other things, the insurance will cater for that. And the last one was actually very interesting, whereby you talk about even home property insurance that is available to us, and we can take advantage to it, and an annual premium that is very affordable is something that we should also take part in. All right, so there's this thing that some of us usually see it as a tax. There's something called NSSF, and National Social Security Fund. What is that about, and how can we benefit from it? Or are there other ways that we can plan for retirement?
So retirement is something that is inevitable, really. And they say that once you retire, if, for example, you are making 100,000 per month pre-retirement, it is estimated that you will need 70 to 80% of that on your month one during retirement. That's about 70 to 80,000 if you are doing 100. So really, it's never too early to start thinking about retirement. NSSF, as you rightly put, is a government vehicle to try and facilitate retirement. And the people who are employed are the ones who the employers are required to contribute. But this is a contribution of, say, 200 to 400 shillings per month, which it is actually 400 because you do 200 as the employee and your employer does 200. That's compulsory. But if you look at 400 over a term of, say, 30 years, really, it's nothing. And that's why William Ruto has really come out strongly on increasing the savings towards retirement. Now, NSSF is now government. Mm-hmm. So there is now the private sector players, the insurance companies that are really urging people to have what we call IPPs, individual pension plans, whereby now it's up to you. It's up to you. You have done your mathematics, you have done your analysis of what you can afford to contribute per month. You are able to set it aside so that it can enable you have a fund when you are ready to retire. Early retirement is about 50 years, and this will go a long way in facilitating your retirement, because remember in the older days, people used to rely on their children, Chris, to help them during retirement. And it is at this time that your medical bills will go up. It is at this time that you will be fairly idle. You will need to be with your grandchildren and what have you. You still need money. So these days, the economy and the way things are expensive and what have you, your children would be happy to help you, but there is so far they can go in terms of their ability, because the world is fast, the world is a consumeristic world. People want also to live their lives, so it's pertinent upon you who have started a new job recently, you who are in the middle of your job. It's up to you to start your retirement as early as possible. And Chris, mostly employees, there are employers who are good in Kenya who will do a retirement for you. They match you, you do 10, they do 10. For the corporate sector, say banks and what have you. But then that person who is self-employed, really, you are left to your own devices, you are left to your own means. So at Moran, we'll be able to sit with you, see what you can contribute per month. We open an IPP for you with a provider, and you can start the journey towards retirement.
All right.
Yes.
So the key message is retirement starts when you start earning your money.
Oh yes.
The planning doesn't start at 45.
No.
But now you're realizing that time is running out and I need to start investing.
Yes.
And that there's something very important that people rarely think about. It's called compound growth, whereby the more you keep your money and not withdraw it over 30, 40 years,
yes,
your money would have been earning interest daily, and at some point the interest will be earning interest for
yes,
you. So it's a much faster growth.
Yes.
And I really appreciate that, what you're saying, that even if you're not employed, being a person who runs your own business, you need to take care of your own pension plans and retirement plans. I think that is very key, and I really appreciate it. I think up to that point, I really appreciate you for coming over and just sharing this great information with us. It has been quite eye-opening, and some of the options that some of us don't even get to hear about, we get to hear about them today, and we really learn a lot. And definitely, I would recommend that people speak to experts like you and Moran, and they're able to just know what are their options and what is it that you can do for them to help them achieve their financial goals. So thank you so much, Ken, for joining us, and I really appreciate it. And as for those who are watching this, I just want to urge you that things like retirement and medical insurance are things that you should not take lightly. Your retirement comes much faster than you think. A medical cover covers you for those things. You can never be sure when you'll be hospitalized, but you can determine who pays the hospital bills, and that's your insurance company. So do not take such information lightly. We've covered a lot of things today about your midterm to long-term investments, and definitely you can rewatch this because this information is vital. So once again, remember to click the subscribe button, click the notification button. Don't miss a thing. At any point in time, we're here for you, and all this great information is available to you anytime. So sit back and relax. More great content will be coming to you in the next episode.